This is the Asia Trade. I'm Paul Allen in Sydney. The top stories this hour. Asian investors bracing for a choppy week with catalysts ranging from US-Japan tariff negotiations to key economic data. The yen edging higher against the dollar early on Monday. Japan's finance minister reportedly set to meet the US Treasury Secretary this week, with cars, rice and the currency said to be on the negotiating table. And China's loan prime rates in focus today as Beijing ramps up public spending for an economy facing damage from the trade turmoil. All right, let's take a look at how futures are shaping up ahead of the start of a new trading week in the Asia-Pacific. A bit of a mixed bag right now. Got Nikkei futures kind of flat at the moment. We've got a bit of strength, though, for the Japanese yen right now, now with a 141 handle against the greenback. And as mentioned, we might have a little bit of movement on the trade front with Japan's Finance Minister Katsunobu Kato going to be meeting the US Treasury Secretary Scott Bessent, making some final arrangements there to hold some trade talks. We might see some movement. We'll get to that story in a little moment. And if we take a look at US futures as well, they ended last week mixed. Markets in the US did. The Dow was a bit lower. The S&P and the Nasdaq were pretty flat, but we've got futures pointing south again at the moment. S&P E-minis off by about 0.5%. Brent crude holding on there at $67 a barrel. A few questions there for US drillers as well. We have a story that US rigs are being idled in the US shale patch due to low prices. So the notion of a drill, baby drill, and low oil prices seem to be struggling to coexist at the moment. Now let's take a look at the markets that are closed around the region. There are a few as the Easter long weekend rolls around. Hong Kong, Australia, New Zealand, not going to have any trade today. Public holiday for those markets. Well, it's going to be a busy week ahead, so let's take a look at what's in store. We are, of course, going to be on watch for signs of fallout from President Trump's trade war. Now, the IMF's going to release new economic forecasts as the spring meetings begin in Washington. The report's expected to mark down growth projections and increase inflation forecasts for some countries. Meanwhile, here in Asia, keep an eye on rate decisions from China and Indonesia. Bloomberg Economics says that China's commercial banks could cut their loan prime rates later on Monday. Bank Indonesia, though, is expected to stay on hold on Wednesday. Now, Chicago Fed President Austin Goolsbee warned against efforts to curtail the central bank's independence. And this comes after President Trump questioned the Fed's decision-making and criticized Chair Jerome Powell.
The fact is, the inflation rate is higher, growth is slower, the job market is worse. So I strongly hope that we do not move ourselves into an environment where monetary independence is questioned, because that would undermine the credibility of the Fed.
Well, let's get some more with Alicia Garcia-Herrero, Chief Asia-Pacific Economist at Natixis. And Alicia, thanks for joining us. We have, of course, seen President Trump in the first 100 days or so picking fights with friends, foes, starting trade wars, and, of course, the Fed now in his sights as well, saying on Truth Social, Powell's termination can't come fast enough. Look, even if it is just rhetoric, is there more risk here, more volatility in store for markets with this kind of talk?
Absolutely. And this is not only because of the Fed independence as such, meaning the ability to cut or hike rates if needed, but also because at the end of the day, the Fed has been instrumental during COVID, and this could happen again, in actually buying U.S. treasuries, and basically through QE, through quantitative easing. So Trump knows very well that the Fed has in store ability to lower long-term rates, not only short-term rates. So the Fed is a very, very juicy opportunity for Trump if what he wants is really not only to lower the dollar, but also to lower the cost of funding for the massive debt, sovereign debt that the U.S. has accumulated over time.
Yeah, well, aside from defending its independence, the Fed's saying very much on message at the moment when it comes to price stability, getting inflation under control. But can you foresee a set of circumstances, the way this year's been going so far, where growth becomes a greater concern for the Fed?
Well, it is likely, yeah, isn't it? Because growth depends very much on investment. Investment depends on, if not certainty, at least some certainty. And here we are in a world of uncertainty. So the most obvious channel is really investment for Trump's policies to affect growth. And therefore, I think it's quite easy to see that. The other one, obviously, is the labor force, meaning if Trump continues to be so strict on immigration policies, because that is needed for growth as well. So yeah, I think the Fed is in a bind because of Trump, because the cutting rates with high inflation is not possible. But of course, growth is pushing Trump to ask for that.
Well, in terms of growth, we're going to get a new set of forecasts from the IMF on Tuesday. Kristalina Georgieva, Managing Director, has already said, look, there's going to be notable markdowns in those forecasts, but she doesn't see a recession. Where do you see the risk of recession, not just in the US, but are there other markets at risk as well?
Well, we still don't know whether these tariffs are going to be permanent. To start, I mean, they aren't really there except for China and some sectors. We have exemptions even on ICT and electronics. We didn't have tariffs for semiconductors. We're still waiting for pharma. So we haven't really seen the full range of tariffs. So in that regard, I think the world might escape recession if Trump realizes that these tariffs are very costly. In a way, ironically, if the markets, since we're at Bloomberg, if the markets are wise enough to put a high cost on additional tariffs, which is what we've been seeing, especially during that terrible week of sell-off in the U.S. Treasury market, I think that is making it more expensive, if you want, for Trump to put the world into a recession. So I would say markets going down in a way would hopefully protect the world from these policies, thus avoid a recession, a global recession.
You mentioned that sell-off that we saw in US Treasuries. Do you feel like some uncomfortable questions are being asked around the haven status of US bonds? And do you see people going elsewhere for safety? Where might that be?
Well, clearly so far the euro, that's what we've seen. And the reason is that Asian currencies are in a way reacting, with the exception of the yen, but more will be warranted from Western, I'm sure. But generally, if you look at the reaction of the RMB then when the sell-off happened, and other Asian currencies, is all depreciation. So there's very few that are actually standing out, basically appreciating against a weakening dollar, and that was the euro big time. And I think there may be other currencies, that will fulfill that role. Maybe Swiss franc, maybe British pound, maybe not the Aussie, because the Aussie is kind of a proxy of RMB or China's currency. But other than that, I think you did have the euro as a big winner. I don't know whether that's a winning strategy for Europe. If you think, in fact, the ECB cut rates, although it was expected, but a very, very strong euro, which takes all of this anxiety about the dollar, could bring the euro to 130, and that would kill the European economy. So nobody wants to be the next dollar as far as strong appreciation is concerned. Let me tell you, nobody's ready because everybody's suffering from a worse economic environment. But the most likely is the euro, indeed.
Yeah, and in terms of the tension between US and China on the trade front at the moment, we have seen China not really willing to come to the negotiating table. Instead, it's added another 7 rare earths to its export control list. Who do you see blinking first in this dispute? Which economy is best placed to withstand the most pain?
Well, the U.S. is blinking first. You just have to listen to what Trump has to say about this. He's ready to negotiate, basically. And I think he went too far. He basically said that, he doesn't want to go further on retaliation with higher and higher tariffs. Tariffs have already closed the market, so it doesn't really matter whether you go further. But that is a signal of willingness to negotiate. And it's not so much because China will not suffer. I think China will suffer from this trade war. But it's mostly about the resilience about that suffering. I think Chinese citizens, if you want, especially households, but even corporations. Let's focus on households. They're ready for this. They've been prepared that this has to happen, that they need to withstand the shock. Americans have not been prepared because they have been basically the Trump administration is telling them that it's going to be wonderful. So that is why the U.S. is going to blink first, in my view.
And do you feel that we might see some more stimulus coming from China, particularly support for consumers and households?
Well, I think China knows that, of course, China has some bullets, but it doesn't have all of the bullets that it used to have for many reasons. We all know that, too much debt. But even on the monetary policy side, which is what we're going to see today with the loan prime rate, is that if they cut very quickly, the depreciation of the RMB will be faster. And I think that's not a very good negotiating tool, that they kind of have that they let the currency go. And also it could prompt capital outflows. Not now, because, the US is not attractive in terms of stock market and so on. But it could happen all of a sudden if data gets worse for China. So I think they need to be careful with the bullets. They need to move them slowly and steadily. And I don't know whether today they will show that. Maybe they're in a position of strength so far, because they had quite good data for the first quarter GDP, and people are looking at Trump like, you're blinking. So maybe the confidence is still there, and they don't need to cut now. They may spare it for later.
Well, we do have a lot of PMIs coming out this week, which should make interesting reading. Australia, Japan, India among them, but also the US as well. And if we take a look at this chart, I'll describe it to you on the Bloomberg terminal. It's a look at the last set of PMIs that we had out of the US. Now, it shows a big lift to the services outlook, but manufacturing definitely seeing signs of pessimism here. Do you anticipate that there's more of this to come?
Surely, because those manufacturers now are confronted with humongous import tariffs, at least from China, but they also have, still sectoral tariffs, auto tariffs, steel and aluminum, which is an important intermediate good, the 10%, regular tariff. So all of this is additional cost for manufacturers. So yes, I think that's going to happen. It's already quite impressive that the service sector is still doing well in the US, at least PMI-wise.
All right, Alicia Garcia-Herrero, Chief Asia-Pacific Economist at Natixis. Thanks, as always, for joining us with your insights. Still to come on the Asia trade, the Council on Foreign Relations joins us with their insights on how well Japan is handling trade talks with the US. Plus, we'll talk investment strategies in a turbulent market with Nikko Asset Management. Much more ahead. This is Bloomberg. Well, both Ukraine and Russia have accused each other of violating a short-term Easter Sunday truce declared by President Vladimir Putin, which Kyiv is offering to extend for a month. For more, let's bring in senior editor Wendy Benjaminson. So, Wendy, is it even possible to say who violated this truce? Is there any evidence on either side?
Well, there's some evidence. I mean, there was still shelling going on in Ukraine, which could be confirmed by air raid sirens going on 2 hours after the ceasefire was supposed to begin. So that gave Ukraine the ground to claim that Russia was violating the ceasefire. At the end of their day today, their commander-in-chief, the head of their armed forces, reported that Russia had violated the ceasefire more than 2,000 times. Ukraine obviously is shooting back, and so the ceasefire didn't really happen. Although Zelensky, the president of Ukraine, did, as you said, offer to extend a truce for 30 days in the hopes that peace would break out. The State Department reportedly came ahead and said that they the U.S. State Department said that they would encourage that. But nobody's heard anything from Russia as of this time.
Yeah, and we understand that the U.S. is, in its attempts to negotiate some peace, is prepared to recognize most of the seized territory so far as Russian, including the Crimean Peninsula, and prevent Ukraine from joining NATO. Has there been any response from Ukraine to this idea? And I think it's fairly predictable what that response might be.
Yes, I think we can all probably write that story ahead of time, although no, we haven't heard any firm response from Zelensky about it. But this fits the pattern that President Trump has engaged in since he began trying to negotiate peace, which is to accede to everything Russia has wanted from the beginning, and not only not give Zelensky or Ukraine the things it wanted, which was NATO membership, or but it's also taking its mineral rights as a repayment for the aid that the U.S. has provided for its defense, and that is unprecedented. I can't think of a time in modern history, at least, when the U.S. has demanded that aid be returned in some form or fashion. So it's an odd deal, and I think Zelensky may sign the minerals deal. I'm not sure he's going to be as happy with the rest of it.
Well, there might be some signs of progress between the nuclear talks between Iran and the U.S., Iran describing them as, progress. What details do we have on that?
We don't really have too many details. These are pretty closed talks. Iran said it now has a better understanding with the United States on a range of issues as far as its nuclear progress, and they want to continue negotiating this week. I believe April 26th is when they will resume, in a place to be determined. But it's a very sort of interesting incident, because Trump is negotiating with Iran over its nuclear program, which is exactly what he strongly criticized President Barack Obama for doing when they made the nuclear deal in 2013, I believe, 13 or 14. And Trump tore up that deal in his first term. So here they are back at the negotiating table. We don't know exactly how this is going to turn out.
All right, Bloomberg's Wendy Benjaminson there. Thank you. Well, China, meanwhile, expanded government spending last quarter at the fastest rate in 3 years, ramping up support for an economy bracing for export declines as a trade war with the U.S. heats up. So for more, let's get to our China correspondent, Minmin Lo. Minmin, how fast is the pace of spending, and is it going to be enough?
Yeah, that's the question, isn't it? Because we have so many banks already downgrading their forecast for China's growth this year. There are growing questions about how China is going to hit its growth target. But clearly, the government is trying to accelerate the pace of implementing the budget, because in the first quarter, spending in the government public budget as well as the government budget had increased by about 5.6% on year, which is the fastest since 2022. And this is particularly notable because the income going into those budgets had been declining because of contracting land sales as well as declining tax and non-tax revenue. And this means that about more than a fifth of the planned expenditure this year has already been spent, although some analysts believe that the government could still raise the budget further later this year by approving more quota for government bonds, for instance. We also have Premier Li Qiang on Friday calling on officials to think out of the box when it comes to implementing these stimulus policy. And he said timing is critical, calling them to act swiftly and early to deliver a well-coordinated policy mix. So increasingly, there is growing expectation that we could see or hear more aggressive policies to be injected perhaps in the coming months. Of course, timing is still a big question here.
And how about the growth side? Bloomberg Economics team's got is the latest to cut China's growth forecast from 4.5 right down to 4.2. So what kind of response, what sort of measures could we expect from policymakers?
Yeah, so clearly the government still needs to do a lot to help lift the economy. We expect measures that would be centered around, of course, boosting consumption is one, and number two would be helping these exporters that are going to be hit by tariffs. So perhaps faster implementation of these tax rebates, as well as expansion of that consumption upgrading policy, for example. That could be an option to expand the types of product categories that would be covered by the subsidies, perhaps even expanding them to services providing consumption vouchers for those. Some banks expecting we could see nationwide fertility benefits to be pushed out as well to encourage more births and more consumption when people have more children. And then monetarily, there's also interest rate cuts, triple R cuts that has been signaled repeatedly by Chinese state media. Again, the question is when. The timing and the scale of these policies is going to determine how fast the China's economy grow this year, and of course the prospect of those US-China talks, and whether those progress will be able to at least alleviate some of the impact of tariffs so far.
Yeah, and in terms of the talks and the tension, on Friday the US had proposed imposing levies on Chinese ships docking in the US. Has China responded to that?
So officially, we hadn't heard from the Chinese government, and it's possible that because this is still in the proposal phase and not officially confirmed, the Chinese government hasn't responded officially. But we did hear from the Chinese Shipbuilding Association, which put out a statement saying that they are in talks with the U.S., also saying that the move is, quote, significantly discriminatory, and the association firmly opposes U.S. accusations based on false facts and prejudice. And the question is whether these talks will be able to yield any fruit and get the U.S. to back down on these proposed levies, because they are going to be charged based on the volume of goods being carried by these vessels, and it's going to be a huge impact for China, given that about a third, more than a third of the vessels that are plying the oceans these days are built or owned by China. And in the next 2 or 3 years, the vessels that will be entering the ocean in the pipeline now, about 52% of them will be from China. So it's going to be a big hit. Importers say it essentially will be equivalent to an additional layer of tariff on top of the reciprocal tariffs that's going to hit Chinese goods.
All right, Bloomberg's China correspondent Min Lo there. We have more ahead on the Asia trade. This is Bloomberg. Let's get to some other stories we're following. A draft presidential executive order circulating among US diplomats proposes a sweeping reshaping of the State Department. The document says the changes to be made by October would eliminate dozens of positions and departments, including those dealing with climate, refugees, democracy and Africa. In a post on X, Secretary of State Marco Rubio called the reported overhaul fake news. Elon Musk has revived his long-awaited plans to visit India after speaking with Prime Minister Narendra Modi. The Tesla CEO had been due to visit a year ago, but postponed the trip at the last minute, citing pressing issues at his auto company at the time. Tesla has long wanted to enter India. Disagreements over import duties and local manufacturing commitments have stalled progress. Let's take a look at what's happening on FX markets. We're seeing a lot of dollar weakness. In fact, the US dollar closed lower this last week for the third week in a row. Got the yen hovering around 141.66 at the moment. Bloomberg Markets Live blog noting that euro US dollar also more active than usual on a Monday morning. FX traders apparently worried about the risk of an early departure for Fed Chair Jerome Powell after more criticism from President Trump. That's also helping prop up the yen. The euro right now 114.37, though that might get tested in the coming week. We have more ahead on the Asia trade. This is Bloomberg. let's take a look at how US Treasury futures are tracking. We have, of course, seen a fair bit of selling in this space over the past few weeks since Liberation Day. So we've got also against this backdrop of President Trump criticizing Jay Powell again, saying in a tweet or on Truth Social, I believe the Powell's termination can't come fast enough. He obviously wants lower rates. So we've got a bit of a mixed picture for bonds at the moment. The yield at the short end ticking up just a little bit. The 10-year futures, though, pointing a little bit softer. Let's take a look at FX as well, because I mentioned the dollar there. It is continuing to weaken, and it closed last week lower again for the third week straight. So we're seeing quite a lot of support right now for the yen, 141.65 at the moment. The euro US dollar cross seeing a lot more trading than it normally would this early on a Monday morning. That 114.40 mark could well get tested in the coming days as well. The dollar spot index, as I mentioned, continuing to soften, 121.1221 there. We do have the potential for some progress on the trade front this week. We have the Japanese finance minister due to meet the US Treasury Secretary Scott Bessent. Among things on the table, potentially defense. Then we could be looking at a potential tweak to Japan's car safety rules as well, although it remains an open question whether Japanese consumers are interested in buying US vehicles, but that feels like it's beside the point at the moment. All right, let's take a look at what else is making news at the moment. Got some key earnings releases coming up this week. Among them, Tesla going to kick off results for the Magnificent Seven on Tuesday. The EV giant's first quarter numbers expected to be lower than previous forecast. You guessed it, due to escalating trade tensions and also brand challenges. The company has faced significant setbacks, including a 125% tariff imposed by China on US imports. Meanwhile, here in Asia, memory chip giant SK Hynix could see its first quarter operating profit more than doubling, but looming US tariffs on semiconductors and electronics may weigh there. Also, Indian consumer giants Hindustan Unilever and Nestle India may also report a slowdown in urban demand. Let's get the latest from the corporate front. Boeing has begun returning 737 MAX jets to the US that were refused by Chinese airline customers. According to data from Flight Radar 24, a jet intended for delivery to Xiamen Air flew back to Guam after arriving in China last month. Bloomberg reported last week that China has told state-run airlines to stop taking delivery of Boeing jets. Tesla's planned rollout of its cheaper cars, including a lower-cost Model Y, has reportedly been delayed by at least 3 months. The Reuters report didn't give a reason for the delay. Tesla is due to report earnings on Tuesday. Investors are looking for guidance on how it intends to turn around its shrinking market share. Let's take a look at what's happening in the commodities space. Continuing to see a fair bit of weakness in the oil price. Right now we've got New York crude just 63.76 a barrel. Brent is also slipping, not on the board there, but that's just under $67 a barrel at the moment as well. It's interesting because at these sorts of levels, it gets rather difficult for US shale drillers to make a profit, and we have seen US rigs being idled in the shale patch due to some of those low prices. Iron ore prices, meanwhile, back below $100 per tonne, but showing a modest recovery at the moment. Gold has blown past last week, that 3,300 level, amid all of the uncertainty continues to push higher. Right now, 3,364 an ounce, and certainly no signs of slowing down at the moment. We have more ahead on the Asia trade. This is Bloomberg. We've got Japanese markets opening at the top of the next hour. Let's take a look at how futures are shaping up. A little bit weaker at the moment, off by about, there we go, about 1% right now. We are going to get some earnings out of Japan later this week as well. Advantest, which tests semiconductors, is going to be reporting numbers. Fourth quarter operating profit there may well have tripled. The big story in Japan at the moment, though, obviously the yen continuing to strengthen, or is that a dollar story, which is continuing to weaken? The US dollar down for its third week straight, continuing to weaken at the start of this week as well. 141.53 for the yen at the moment. My colleague Shery is joining us from Tokyo. Shery, what are you keeping an eye on?
Yeah, we'll be watching those trade negotiations as we head towards another conversation between the finance minister of Japan as well as Secretary Scott Bessent, of course, this Thursday on the sidelines of the IMF. And of course, what will be discussed is what's happening really afterwards now that we have these trade negotiations ongoing. Of course, we had the chief Japan trade negotiator talking to the U.S. side about what will be on the table for these discussions next. Joining us now is Sheila Smith, Senior Fellow for Asia Pacific Studies at the Council on Foreign Relations. Sheila, it's really great to have you with us. First of all, as we head towards this next set of negotiations between policymakers of Japan and Washington, what did you make of Akazawa's visit to the U.S. and what was discussed there?
Thank you. And again, thank you for having me. It's a pleasure. So, I think what was striking about the Akazawa visit last week is everybody expected this to be the first round or the first salvo, so to speak, in a protracted process. What happened, in fact, was that Minister Akazawa met President Trump for 50 minutes before he even managed to meet with the economic cabinet members that then laid out some of the issues that the United States was interested in. The optics were very positive. President Trump went in sort of making allusions to the lack of reciprocity in the security treaty, so he set the table rather firmly at the beginning. But when you saw him and Minister Akazawa together in the Oval Office, it was all smiles. It was such a great visit. Again, both the president and the Minister Akazawa were trying to communicate that this was a very friendly, cooperative, and constructive conversation. So I think we've seen the optics be very, very important to this U.S.-Japan piece. The nitty-gritty, of course, will get more difficult for Japan, and I think Prime Minister Ishiba sees ahead a very tricky negotiation for his country.
Given that at this point, all trading partners of the United States are trying to figure out what President Trump wants, how would you define a win here for Tokyo?
Well, that's a great question. I wish I could answer it. I think what's less clear to me at this stage is exactly what a comprehensive deal is going to look like and what it's going to include. And this is the way the Trump administration officials have been characterizing the U.S.-Japan talks, that this is not very narrowly about a sector of the economy. It's largely about the U.S.-Japan relationship, economic relationship, and as the president alluded, the military relationship as well. President Trump has a very deeply ingrained sense that our allies are taking advantage of the United States, and he uses that in his tweets and he uses that in his public comments, despite his warmth, I guess, in the meetings with the Japanese officials. I think it's going to be interesting to watch. You alluded to this in your opening. The finance cabinet members are going to meet. So this is Minister Kato from the Japanese Ministry of Finance, and again, our Treasury Secretary Bessent. They have delinked the currency issue, at least for now. And so that was one of the pieces of the puzzle I thought was important going into the trade talks. But on the trade agenda is a host of sectoral trade tariffs that are already in place. And then this threat, of course, of the reciprocal tariffs. Japan wants to slow this conversation down. It wants to have a piece-by-piece review of tariffs and non-tariff barriers in the U.S.-Japan partnership. It wants not the 90-day end point or end game that the Trump administration is looking for. I suspect they would like a long and more measured conversation about what constitutes equity in the trade sphere.
Yeah, Sheila, in terms of slowing things down, do you suspect there might be an element of gamesmanship going on here? Because the longer this drags on, the more pain both economies are going to feel. And do you suspect that maybe one economy is better prepared than the other to endure a little bit of pain, is a little bit more resilient, and might be able to extract better terms?
That is a fair point, and I wish I was inside the head of the prime minister in Tokyo. I think they want to get a better handle on just exactly what the United States is asking for, and so they're exploring the contours of the Trump administration's thinking, and they want to do it carefully. Prime Minister Ishiba, just a day or so ago, gathered former Prime Minister Kishida and many of his mentors, friends within the Liberal Democratic Party, to say, not quite sure about our strategy here and how we go ahead. But publicly, Prime Minister Ishiba has said he wants to set a model for the rest of the world in how to deal with this very uncomfortable idea that the United States is going to extract concessions, not only from its allies, but from others in the global trading sphere who are worried about what the consequences not just are for their country, but are for the global trading system writ large. So it's a tough road ahead for the Japanese.
Yeah, let's take a look at a couple of these tariff-specific examples as well. For example, automobiles. Prime Minister Ishiba says, well, look, there might be some room to move on Japanese safety standards when it comes to US autos, but does that ignore the broader question, do Japanese consumers actually want to buy US cars?
No. And you know, I think the Japanese government quietly will point out that their tariff rate on the import of autos to Japan is pretty much close to zero. So customer preference and the market really are determining what the success or lack thereof is for American automakers in the Japanese market. Of course, you have driving on the opposite side of the road in Japan and the United States, so it's not an easy market for American manufacturers. That being said, you know, it's important to remember that it's not just about bilateral trade here. We're really talking about a supply chain for Japanese automakers and those that invest with them together in the United States, that the North American free trade, the free market inside Canada, Mexico, and the United States were envisioned as being a fairly resilient supply chain for Japanese automakers. So it's not just the binational US-Japan conversation that matters. It is what happens with Mexico and Canada as well. So this is very tricky territory, and I think the auto industry is going to be most nervous about how the Trump administration is going to proceed with Japan, but there are some aspects of this that can't be solved bilaterally, and I think it's important to remember that as well.
Yeah, I really can't imagine fitting those giant American trucks into these tiny little Japanese roads, but we are expecting rice imports also potentially to be on the table, something that Japanese policymakers will actually need to sell to their own public.
Right. And as you know, I am not an expert on the Japanese rice, rice farmers, but it is apparent that Japanese rice farmers have also undergone a fairly significant transformation as the Trans-Pacific Partnership Agreement began to be implemented by Japan. I mean, agricultural goods was one of the products areas, right, that the Trans-Pacific Partnership was very focused on. And rice producers in Japan began to see their rice not just simply as, you know, something to sustain Japanese tastes and market, but something to also see as a luxury good that could be exported to the rest of Asia. So I think there's complexity to this. It's not just about the numbers coming down, but it's about consumer preferences. It's about other economies that consume Japanese products, and now agriculture is a bit of a niche luxury market for many in Asia. So I think this is where I think you're going to see the Trump administration's approach being a little bit inconsistent with how the market sees the demand for these products.
And it's even going to get more complicated if we do see the Trump administration attempting to link these economic issues with perhaps military issues. What are we expecting in terms of President Trump wanting Japan to shoulder more of the cost of U.S. military support?
So this is where I'm keeping an eye on, because as you know, this is sort of a little closer to my area of expertise. But the Japanese and the United States have what's called a host nation support agreement. They run for 5 years. The current one began to be implemented in 2022 and runs through the Japanese fiscal year of 2027. It's about $8.6 billion worth of Japanese government support for the presence of U.S. forces in Japan. And it runs the gamut of payments for utilities for American bases in Japan, the Japanese labor costs, for Japanese nationals who work on these bases, some of whom are master engineers that make sure the American 7th Fleet is ready to sail. And there's other pieces, land rentals and other kinds of pieces to the puzzle as well. But $8.6 billion over 5 years is currently what the Japanese are contributing to the U.S.-Japan partnership in terms of U.S. forces in Japan. There are all kinds of other ways the Japanese contribute to the partnership. But that's, I think, what the president was alluding to in his tweet before Akazawa-san began his talks with the Trump administration. That was the cost of military protection for Japan. And it was an ambiguous phrase that he put on Truth Social. So it wasn't quite clear to me whether this was the host nation support agreement specifically, or it was the alliance writ large. The president has repeatedly stated that he sees the U.S.-Japan alliance as being one-sided, and that's not fair. And so there is, I think, in Tokyo, some worry that the Trump administration might open up the trade talks or the economic talks, which are quite technical, to include this kind of balancing act between how much America pays to contribute to Japan's defenses versus how much Japan pays to continue to maintain the trade relationship with the United States.
Sheila, is this, though, perhaps an area where there might be an easier path to agreement? Because, of course, Japan lives in a strategically challenging geographical environment, and it's not getting any easier. Is the notion of weapon sales or contributing more some low-hanging fruit in this regard?
Well, I think what's interesting is if you look back at the first Trump administration, the Japanese bought 104 F-35s, and that was negotiated by President Trump directly. These are Lockheed Martin aircraft, so Lockheed Martin was also in on that conversation. And Prime Minister Abe Shinzo at the time decided, okay, fine, we will buy them off the shelf as the United States asked. They won't be produced partially in Japan through a program called Foreign Military Sales, which means that the Japanese companies would help to construct these aircraft on Japanese soil. So I think the president really wanted to make sure that there were jobs that were going to be created from this military deal of the purchase of these aircraft. There was no problem. The Japanese wanted these aircraft, of course, but it was really important that they were made in the United States and shipped to Japan. And the president could then say, we created American jobs. We sustained an important industry in the United States. Today, I think there's other issues on the table. There are other weapon systems on the table. But I think for now, it's a little early to sort of wonder or guess or speculate about what exactly the Trump administration may be looking at on the military side of things. I think our narrow focus on the host nation support agreement is wise because that's an obvious place of focus in the next year or so. There's another element, and we don't have time to really go into it in too much detail, but it came up when President Trump met with Prime Minister Ishiba, and that is the LNG gas purchases by Japan that the Prime Minister really would like to put front and center in terms of the U.S.-Japan partnership. There's a infrastructure project from Alaska that would be billions of dollars, frankly, that would allow the Alaskan exports of gas and oil to go to Japan. So I think there's other pieces of the puzzle here that we've yet to quite put together in this jigsaw puzzle. So it could be trade, military support, and also the infrastructure necessary for LNG exports that might also be the third pillar of whatever deal is struck.
Sheila, we do actually have a moment to devote to that infrastructure plan that you mentioned, that potential pipeline from Alaska to Japan. I mean, it was a great idea, but it sounds very expensive. Who pays for it?
Well, that's the question. And when I heard Prime Minister Ishiba and President Trump, when they spoke at the press conference, now this goes back to February during that meeting when Prime Minister Ishiba came to Washington, Prime Minister Ishiba was talking about ships, and President Trump was talking about the pipeline. So I think there's a little bit of distance yet in conception about what the infrastructure that would allow considerably larger amounts of exports of American LNG from Alaska to move to East Asia. Japan and also, remember, South Korea as well would like to have some of that. Who's going to pay for it? My guess is the Trump administration would expect our allies to pay for that. But if it's building a lot of ships and ports and that kind of thing, that's one piece of the puzzle. If it's a pipeline, as you know, from Alaska to Tokyo, that's a tremendous piece of engineering. It's also a tremendously high price tag to accomplish that kind of a project.
Right. Sheila Smith, really good to have you with us, Senior Fellow for Asia-Pacific Studies at the Council on Foreign Relations. Catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo. Subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
Well, we're seeing a lot of movements to kick off the week in FX markets, particularly with the dollar. Ended last week in a hole and starts this one by continuing to dig. We've got the dollar spot index now close to taking out its 2024 low. The greenback now weaker for 3 consecutive weeks. So we've got a yen at 141.52. A lot more trading than you'd normally see on a Monday morning in euro dollar as well. That's at 114.56. So the yen extending its gains to be the strongest since September now against the greenback. All right, let's get a little bit more on this. We are joined by Paul Dobson. Paul, when you run your eye across some of these moves, what are you thinking? Where's the floor for the dollar here?
Well, I mean, it's a good question. I think we're at a pretty important level of support for the dollar against the yen here. That 141, 140 level has seen quite a lot of recoveries previously. So if we do take that out, then that would open up the door for much more downside there. And likewise against the euro, also stretching those new highs. You know, I think that there's a couple of things going on in the background here. One, I don't think markets particularly like the idea that Trump again is agitating against Fed Chair Powell. And two, I think that people are just finding a lot of other attractive options all around the world at the moment. We hear from the Japanese life insurers. They're talking about wanting to bring more money home to buy longer maturity Japanese government bonds. We heard that some Chinese investors are looking to move some money out of treasuries into euros, into yen as well. Even in emerging markets, if you're looking at local currency bonds, which yield less than treasuries, people are still more excited about that from the idea that there could be further currency appreciation, further capital gains, rather than holding hard currency EM bonds. So lots of people looking at different ways of moving cash out of the dollar at the moment, and hence I think you see a little bit of pressure there.
All right, Bloomberg's Asia Markets Executive Editor Paul Dobson there. We'll continue to keep an eye on the progress of the dollar. Got a lot of closed markets, though, today. Australia, Hong Kong, New Zealand, no trade for Easter Monday. Market opens in Seoul and Tokyo next.
This is the Asia Trade. We're counting down to Asia's major market opens on a crucial week where we'll see the first indications of that economic impact coming from President Trump's tariff through getting PMI numbers from Japan, US, Europe as well. Not to mention, of course, Paul, that we'll be watching the IMF with its revised growth forecasts.
Yeah, that's right. Kristalina Georgieva already softening everybody up, saying there's going to be some notable downward revisions there. Ruling out a recession, though. Got a lot of earnings coming out this week as well, particularly from India, also Japan and SK Hynix in South Korea. But, Shery, it's really currencies that are very much in focus this morning.
Yeah, the Japanese yen holding steady, perhaps strengthening a little bit against the U.S. dollar. And of course, we have seen it really trading within a tight range. We continue to watch those trade negotiations ongoing. We do have the finance minister of Japan meeting Scott Bessent in the U.S. on Thursday. So we'll be watching out for those negotiations as the topics in the Nikkei are coming online to the downside of about 0.5%. Of course, a little bit thin trading still this week because we do have Hong Kong, Australia, New Zealand away on holidays. The Japanese yen holding at that 141 level. Against the U.S. dollar, we'll be watching JGBs very closely. We have heard from a couple of life insurers talking about wanting to buy more domestic bonds, given that we have seen those ultra long yields here in Japan surging in the past few weeks. Take a look at how South Korea is coming online. We do have breaking news with the first 20 days of April, the export data falling 5.2% year on year. And now that has left a trade deficit for the first 20 days of this month of $137 million. We have seen imports falling more than 11% year on year. Of course, we'll be watching some of those crucial export sectors, including automakers, because we continue to watch for any tariff implication on that sector. The Kosdaq is down about 0.1%. The Korean won strengthening a little bit against the U.S. dollar right now as well, Paul.
Well, let's take a look at how treasuries are trading at the moment, because we've heard from President Trump again saying that on social media that Jay Powell's termination can't come fast enough. The president obviously wants lower rates. Austin Goolsbee was also speaking earlier, reiterating the importance of Fed independence. But we're seeing yields relatively calm at the moment. The yield on the 10-year 433.46 right now. We've got yields slipping a little at the short end of the curve as well. If we take a look at oil prices also, well, also sliding, mainly around energy demand concerns on this trade-inspired concerns, and also the US and Iran having some encouraging conversations which may change the picture for Iranian supply, Shery.
Yeah, let's discuss what will really move the markets this week. Joining us now is Naomi Fink, Chief Global Strategist at Nikko Asset Management. Naomi, great to have you with us. At least for now, we haven't seen too many trade negotiations back and forth over the weekend, at least. But when it comes to the rest of the week, what will you be watching?
Well, I think given what we've seen so far, especially since the tariffs have been announced, it might be that we do not get a straight answer even when we reach the conclusion of these negotiations. The negotiation, not only with Japan, but the negotiations may continue far longer than we're really expecting right now. Even if we do get an outcome, that outcome is probably liable to get renegotiated. We've seen a lot of changes. So I think right now what we can really only expect is that there are going to be several possible outcomes. One of those outcomes, I think, is probably at least more favorable in terms of risk assets than others, and may involve the U.S. not falling into a near-term recession. But at the same time, we cannot rule out that the possibility of near-term recession. And I would emphasize that the whole idea of tariffs is probably going to be hardest on the U.S. consumer. That's who it's going to be toughest for.
And of course, that potential recession could also come with just disinflation, as the Fed has wanted to see, or even just stagflation, right? Because of continuing to prices rising because of the tariffs. What would the implications be for the markets depending on those two scenarios?
Well, if we do see continued disinflation, then the Fed probably can be more comfortable with rate cuts. If we do see weaker growth and softer inflation, that's usually a typical environment in which a central bank would cut rates. But if we see weaker growth, but the inflation does not come lower, then they will be a bit hobbled by that high inflation, so we won't be able to see relief from monetary policy. That's just how central banks work.
Where do you go for cover at a time like this? Because some of those traditional plays, the US dollar, we're seeing getting beaten up at the moment. US treasuries have been selling off. I mean, we've got gold at a record, but do you look to other bond markets elsewhere? Where are you finding safety?
Well, I think it's probably hard to find certainty, even if you just put cash under the mattress, which is what has happened in Japan for decades and which is now finally reversing. I think it's going to be very hard to find one asset that's just the magic bullet. So probably the best idea is to diversify, which means that you're not going to be completely insulated from market moves. You don't want to have zero allocation to risk assets because they also do rise. They don't only fall. So probably what you want to do is find some areas that will at least insulate you against the worst of the declines. One of the things that we have been looking at is the potential for domestic demand in some of these surplus economies, especially in Asia, to a bit longer term come through. Because what do you do when one of your largest trade partners says, well, we don't really want to buy many of your products anymore? Well, you see what you can do internally. And then a lot of these countries do have huge built-up surpluses, so they can use it to stimulate domestic demand. There are other assets such as gold, which is remaining supported probably because of this lack of other risk havens. But I would see that as part of a diversified portfolio as well. But I wouldn't be too hasty to dump any asset. I would look to try and diversify well with some of these indicators that I mentioned just now.
Yeah, when you see selling like we've seen, the conversation inevitably turns to dip buying. There's certainly some bargains to be had, but what's the risk here? Are we still in catch the falling knife territory, or is this a time to take a look at some purchases?
Well, I think if we are long-term investors, then probably what we want to do is just calm down and maybe dollar cost average. So yeah, we'll be dip buying some of the time we won't be. But what we're looking for is long-term compounding. And if we do average at a rate where long-term we can still benefit from economic growth over many years, then we should be okay. What I would discourage is trading around these volatile markets, unless, of course, you are somebody who wants to benefit off of that. Long-term investors, though, I find typically aren't very successful at timing markets. So what you want to do is, yes, position, yes, diversify, but you don't really want to be timing a lot of these moves because you might lose some of that opportunity to long-term compound.
Would you invest for the long term in China? Because we have seen that they're not as trade dependent as they used to be, some saying that they could actually come out okay on the other side of this trade war.
So I think China is too large an economy and too large a market and still long-term growing to ignore. I don't think that, I know that some have called China uninvestable before. I don't think that's true. I think it is a risky market, but we are investors who invest in risky markets. It's just the degree of risk and how we can diversify. So of course it definitely involves an understanding and a strategy, but I would definitely say that China is part of a well-diversified global portfolio.
And we continue to see the weakness in the U.S. dollar, and on the other side of that trade, of course, the strength of the Japanese yen. Mizuho Securities now talking about 130s also being a level at this point by year end. What do you think?
Well, we've certainly seen dollar-yen at that level before. But what we want, I think, if we are going to have some sort of ability to avoid U.S. recession, for example, is we want to have moves that are not sudden and not kind of a flight to riskless assets, if those exist anymore. Maybe the yen is closer to the idea of a riskless asset. Now, if we do see a sudden strengthening in the yen, that could upend a lot of corporates' plans, and it could probably cause a lot of disruption. But if we see gradual strengthening of the yen, it allows the economy some time to adjust. Of course, it's not as good for exporters, but a lot of the exporters are large firms who can hedge, who can move their investments around, they can deal with it. A lot of the smaller players in Japan, though, are importers, and they can benefit from a gradual strengthening of the yen. So as long as the moves can remain relatively measured, then I think Japan can adapt pretty well.
Naomi, Fink, good to have you with us, Chief Global Strategist at Nikko Asset Management, here with a view of the markets as we continue to watch Japanese automakers as well. Of course, they'll take a big impact on the moves of the Japanese yen, but also we're hearing from local media that Japanese trade negotiators are looking to car safety rules in order to gain a deal with the United States. U.S. car makers have long complained about perceived non-tariff barriers blocking access to Japan's market, including very strict safety standards, and that might be on the table when these negotiations continue later this week between the finance minister and the secretary of Treasury of the U.S., Scott Bessent, along the sidelines of the IMF. This is Bloomberg.
All right, let's take a look at what's happening in the currency space. Selling the dollar pretty much sums it up at the moment. We've got the dollar spot index closing in on its 2024 low. So the currencies that are benefiting from this, we've got the yen continuing to strengthen, now 149.39, and the euro, which is seeing a lot more trade than it might normally this early on a Monday, now 114.71. Well, China, meanwhile, has expanded government spending last quarter at the fastest rate in 3 years, ramping up support for an economy bracing for export declines as a trade war with the US heats up. For more, let's bring in our China correspondent, Min Lo. So, Min, how fast is the pace of spending? Is it going to be enough?
Yeah, so in the first quarter, the government had really accelerated the implementation of the budget because spending from the two budget accounts, the general public budget and the government budget, had increased by 5.6% on year in the first quarter. That's the fastest since 2022, and it's remarkable as well because the income going into these budgets had been falling because of contracting land sales, the decline in tax and non-tax revenues as well. And so the government is clearly trying to ramp up support for the economy. We saw local governments speeding up the issuance of local government special bonds to swap out their hidden debt in order to increase their cash flow. And Premier Li Qiang as well on Friday calling on local officials to act swiftly and early, saying that timing is critical for them to deliver a well-coordinated policy mix, and calling on officials to think out of the box as well. So a lot of expectations that perhaps going into next month we could see more aggressive policy coming from the Chinese government, especially after the April Politburo meeting.
What could thinking out of the box actually mean when it comes to specific measures from policymakers?
Yeah, that is the question, because so far China has been relying heavily on the consumption subsidies to boost consumption. And actually, that has been very effective. We look at the first quarter GDP had outperformed expectations. Some analysts expect that China could expand that existing consumption upgrading program to include more categories of products and also including services as well, possibly with consumption vouchers. And expectations are that China will not only help to boost consumption, they are also going to possibly look at measures to support some of these exporters that are going to be hard hit by those tariffs. So perhaps faster implementation of these tax rebates. But whether there would be innovative measures beyond what we have already heard before, that's still the question, because so far the government has not really gone beyond their usual playbook. But clearly a lot of ramping up of government spending to swap out local government debt, more fiscal policies to support consumption. Nationwide fertility benefits could be another measure. And of course, cutting of interest rates and triple R that has been signaled repeatedly by these Chinese state media and could come very imminently.
Also on Friday, we had the US imposing levies on Chinese ships which dock in the US. Have we had any response from China so far?
Yes, so we haven't heard official response from China yet, and it could be because these are proposed levies that are not officially in force yet. But we heard from the Chinese Shipbuilding Association saying that they are in talks with the U.S., also issuing a statement saying the move is, quote, significantly discriminatory, and that the association firmly opposes U.S. accusations based on false facts and prejudice. So it remains to be seen whether those talks will be successful in getting the U.S. to back down on some of these levies or change or lower the rates on the levies. But a Citi research analyst had put out a note saying that possible retaliatory moves from China, if this goes ahead, could be perhaps imposing similar levies on vessels that carry U.S. goods to China, or perhaps even on U.S.-made aircrafts that land in Beijing airports. So could be a possible escalation of the existing trade war. Importers saying that these levy on Chinese ships is going to be essentially adding on another layer of tariffs on top of the already very prohibitive levels of reciprocal tariffs on Chinese goods.
Bloomberg China correspondent Min Min Lo there with what to expect from the Chinese economy, as we're also watching Beijing for some big advances in the tech sector. Paul, we've seen this first half marathon for androids. That was what this race was billed as. We saw these robots with arms and legs really running, as you can see, alongside their humans. But it turns out that just 4 out of 21 robotic runners actually were able to complete the race in the allotted 4 hours. It's happening in Beijing's southern tech hub of E-Town. And in a way, there were some comical moments as well. Lots of breakdowns, having to change batteries as well.
Yeah, that's right. The battery changes were part of the rules. I believe that the robot that won had 3 battery changes in its 2-hour 40 finish time, which was an hour slower than the fastest human. Another one had smoke coming out the top of its head, but its creators said, well, look, it was only designed to last 3 miles anyway. But it's easy to mock the fact that only 4 out of 21 finished. But this does kind of remind me of the dial-up days of the internet. And we know that ChatGPT now remembers its past interactions. So I'm loath to insult these robots in case they remember.
Yeah, that's so true. And also at a time when we continue to see all of this exuberance over artificial intelligence and what Beijing can really do, right, with the likes of a huge progress with DeepSeek as well. So we'll be continuing to watch not only robotics, artificial intelligence, and just the technological sector and advancement in China as well, as we continue to see this really twin race between these world's 2 largest rivals, China and the U.S. We'll have more. This is Bloomberg. We're keeping our eye at the National Assembly here in Japan because the Prime Minister Shigeru Ishiba, as well as the Chief Trade Negotiator Ryosei Akazawa, are taking questions from lawmakers on the trade talks ongoing with the U.S. We already heard from Prime Minister Ishiba saying that the U.S. sees these trade negotiations with Japan as important. You can see him speaking right there to lawmakers. Tariff negotiations between Tokyo and Washington are set to continue this week. Separately, we heard from U.S. Ambassador to Japan George Glass saying that he's optimistic that a deal can be reached.
The Secretary of Treasury, the Secretary of Commerce are both people that I know and have spoken with and are brilliant in their fields. And they're also very creative, out-of-the-box thinkers. And when I saw that President Trump then decided he was going to get involved and has now named this his top priority, that's why I have a lot of confidence that we'll get something done.
Local media reporting that Finance Minister Katsunobu Kato is scheduled to meet on Thursday in Washington with Treasury Secretary Scott Bessent. Bloomberg editor John Herskovitz joins us now for more on this. And I know that both sides really want to get a trade deal done within the 90-day pause period on tariffs. But how likely is this to happen, given that what's on the table seems to be pretty complicated?
Sure. It's a really deep and long relationship between the two countries. And we may have the talks going on this week. Finance Minister Kato is going to Washington for IMF World Bank meetings. Local media is saying that the meeting between the two will be on the 24th. And Japan seems to be offering up some points which it could work where they see a deal possible. There were reports in Japanese media that Japan is looking at reducing some non-tariff barriers in the auto sector regarding inspections, safety protocols, and also looking at things on agriculture like rice and soybeans. And these are things which have been going on for years, and hopefully Japan sees these as a way to make some sort of breakthrough in the talks.
They have been going on for years, and that's not necessarily popular with the Japanese public. So what could be some of the concerns for Tokyo here?
Yeah, it's how much market access they want to give, and also the fact that even with the market access, things may not change. American autos have been trying to get into the Japanese market. I remember doing trade negotiations from the 1990s where this was a concern, and Japanese have never really picked up on U.S. autos. I think the effective tariff rate for U.S. cars in Japan is about 0. So even with these non-tariff barriers, it may not make many changes. With rice, it's such a part of Japanese culture. This is food security issues, and even if there was more U.S. rice imported to Japan, it may not make its way to Japanese consumers. It could be used for animal feed or something of that sort.
John, Japan also wants a full review of tariffs. Now, that's going to take quite a long time. Is there a sense that Japan might be trying to run down the clock on this?
I think that Japan wants to see these things unwound. Japan has key exports to the U.S. Its auto industry is vital to the economy. It wants to see things move forward. It's been hit with the tariffs on sectoral issues, steel, aluminum. They have the auto tariffs that are on now. Next month, there's supposed to be parts tariffs, which will hit Japanese manufacturers in the U.S. This could start costing car makers jobs for U.S. workers who are at Japanese plants. So I think Japan really wants to move forward. It's vital for the economy, and they want to get something done because the tariffs are massive on key sectors, and the 10% across the board tariff is quite large for this country, which really relies on its exports to the U.S. for higher ticket items. So Japan is looking to get some sort of deal done.
Not to mention that it relies on Japan for its own it relies on the United States for its own security, right?
Yeah.
I mean, what are the chances that those two issues get convoluted here?
Yeah, that's one of the big concerns for Japan, that the U.S. is going to introduce other things besides trade issues. One of the things could be security. Trump for years has called on Japan to pay more to host U.S. troops in the country. There's also the worry that currency could be a part of this. And Trump has said that Japan has too weak of a currency, and he wants to see things change. So these issues beyond trade products could really affect the talks. And this also raises questions about the U.S.-Japan defense alliance, which has been going on for years, forged after World War II with Japan's defeat, and has been a part of the relations for decades.
Bloomberg editor John Herskovitz here with the latest on what to expect from the Japan-U.S. trade negotiations. And we haven't even touched the Japanese currency that could potentially also come up. We're watching other assets on the markets right now, especially the euro, because we have seen the Japanese yen, the euro also strengthen against a weaker U.S. dollar. We're talking about the Bibidixi getting to the lows that we haven't seen since September of last year. And on the other side of that trade, the euro is now rising to the highest level since February of 2022. And this, of course, coming after we saw European stocks pretty steady in the last few sessions, given that we did get the ECB cutting rates for the 7th time. European equities remain pretty unchanged. We're seeing right now futures, Paul, to the downside of more than 0.5%.
Let's take a look at what's happening in the oil space. Seen a lot of softness in the oil price recently. We've got Brent crude 67.32 at the moment, so slipping another 1%. Obviously concerns around the demand picture due to the ongoing trade tension, but also the US and Iran have had some rather productive talks around the nuclear program. That's according to the Iranian side anyway, so that could change the picture for more supply potentially out of Iran. Got the iron oil price holding pretty steady there, still below $100 per tonne. And copper, which is something of a bellwether for growth expectations, continuing to soften. More ahead on the Age of Trade. This is Bloomberg.
We're seeing treasuries mixed a little bit in early trading across Asia. This, of course, as we continue to see longer dated maturity yields continuing to gain ground as shorter dated ones are falling at the moment. We had a little bit more stabilization in the treasuries market last week, paring back some of that weekly advance. Long maturity yields, though, were rising the most. We continue to see the rising oil prices, boosting inflation expectations as well. So the yield curve steepening notably. And really this week will be, again, about trade negotiations, about economic reports as well. We do have the Fed's Beige Book on Wednesday, and we're expected to get some sort of picture into the regional economic conditions and what really these businesses are thinking in relation to how these tariffs could affect their outlook, Paul. So we'll continue to watch as we're also, of course, expecting PMIs from not only the U.S., Europe, but also in Japan as well on a week that the IMF will be releasing a new economic forecast, Paul.
Yes, those forecasts expecting to make grim reading as well. Already Kristalina Georgieva has said there's going to be some notable downward revisions, though she doesn't have a recession in her forecast, or at least not yet. Anyway, mixed picture for those markets around the Asia-Pacific that are open. The one on the right isn't open. Australia is actually closed today for the Easter Monday holiday, so you're seeing Friday's closed there. The Nikkei, though, is off by 2/3% at the moment. A little bit of softness, and we've got the Kospi better by 0.5%, Shery.
Hong Kong, another market that's closed today, but mainland China is coming online. Chicago Fed President Austin Goolsbee also warning against efforts to curtail the central bank's independence. It comes after President Trump questioned the Fed's decision-making and criticized Chair Jerome Powell.
The fact is, the inflation rate is higher, growth is slower, the job market is worse. So we really, I strongly hope that we do not move ourselves into an environment where monetary independence is questioned, because that would undermine the credibility of the Fed.
On the other side, China also expanding government spending last quarter at the fastest rate in 3 years, ramping up support for an economy bracing for export declines as a trade war with the U.S. heats up. For more, Bloomberg's Asia Markets Executive Editor Paul Dobson and our Asia Equities Managing Editor Liang Ting Tu join us from Singapore. I want to get to the Chinese markets, but first of all, Paul, let me start with you because we continue to see the pressure on the U.S. dollar, really these bearish bets accelerating. What's behind this move, and what can we expect the trading session to look like the rest of the week?
Yeah, good morning. So I think that there's a little bit more seeping into markets this morning, that concern over the aggressive rhetoric against the Fed and against the Fed Chair Jerome Powell. There's the idea that it's sort of one more factor that's undermining the credibility of the U.S. As an investment destination. It's not just that, though. People are finding other alternative and attractive options for their money outside of the U.S. right now. So we have that sort of de-dollarization trade, people moving more money back into Japanese government bonds, into European bonds as well. We've seen that from not only Japanese investors, from Chinese investors and international investors. Even in the emerging market space, people are looking at local currency debt rather than hard currency debt, moving money away from the dollar there because they're concerned about more currency weakness. So it's sort of becoming a little bit self-fulfilling. And don't forget, this is also a little bit part of the plan. Trump wants a weaker dollar. He said that very explicitly. So he's not going to be too worried about the fact that this is happening.
We're just getting some breaking news out of China in the meantime. According to MOFCOM, China now vowing to take countermeasures in terms of opposing any deal which may harm China's interests. There's certainly no sign of China wanting to move to the reconciliation stage of this trade war. According to the MOFCOM, China firmly opposing any deal that would harm China's interests and vowing to take countermeasures. So let's bring in Liang Ting on that note. Liang Ting, as we mentioned there in the introduction, China also ramping up spending to support the economy. What did it spend? 9.26 trillion yuan in the first quarter, rising 5.6%. So is there more support on the way to markets? How do we expect Chinese equities to respond to China digging in its heels on trade?
Yeah, morning, Paul. After a big plunge on Monday 2 weeks ago, China's onshore market actually has been faring relatively well. It's been steadily on the upward path, and the Shanghai Composite actually had 8 straight sessions of gains just before last Friday, which had a small dip. Now, that was mainly, I would say, dip buying, but also the national team played a big role. We've reported that the national team had record buying just a few sessions ago, and last week, we saw 3 sessions where national team came in the last 20 minutes of trading to bolster the market. And the Shanghai Composite in all these 3 sessions ended the session with a small gain. But the gain was modest, which shows that the national team actually just wanted to make sure that the index doesn't end up in the red for the session. That actually is not that great for the breadth of the whole stock market, because most of the onshore stocks actually ended the week sort of at a session low. So overall, I would say more support is coming, and this time the national team has more resources because they have an unlimited line to the PBOC. And of course, it all depends on whether the escalation with the U.S. in terms of trade negotiation pans out. Because if there is actually a breakthrough, I think traders should really be prepared for a sudden rally in the Chinese market, both onshore and offshore.
How much support can we expect from the monetary policy side of things? We are getting the loan prime rates, and are we expecting commercial banks to cut rates today? And what would that mean for the markets?
Yeah, I think that element we're expected to be unchanged, but Chinese banks right now has ample liquidity. As mentioned, the national team has an unlimited line to the PBOC, and the PBOC is gearing up to support the commercial banks to boost the economy and infrastructure spending as well. So I think overall, the banks will play this time around more of sort of a patriotic role, and then the banks actually their net interest margin looks really relatively decent in the last earnings season. And of course, now we're in the current reporting season as well. So we'll see how that pans out for the commercial banks.
Paul, I just want to get your thoughts on whether or not the yuan might play a role or an increasing role in this discussion between the US and China on trade.
I'm sure that the Trump administration would like to bring the currency up at some point during those conversations. We saw with Japan last week, they managed to keep it out of that conversation and have it as a separate sort of discussion. And maybe China will try to pursue a similar policy. What I think has been really interesting with the yuan is it's been basically following the dollar. So as the dollar has weakened pretty much across the board, the yuan has gone with it and even weakened a little bit against the dollar as well. So against trading partners in general, China is in a more favorable position as we go into the tariff hikes and situation because of that weaker currency, which will boost the appeal of its exports all around the world and not just to the US.
Paul, we continue to watch the Treasury space because of these holdings by sovereign giants, right? But we had been asking and speculating whether China could cut back on those purchases of Treasury holdings because of this ongoing trade war. What's interesting is that Deutsche Bank is now saying that their Chinese clients have reduced some of their Treasury holdings in favor of European debt. I mean, these are private investors, but what do you make of the dynamic and the view of U.S. assets at this point worldwide?
Yeah, I think that there's certainly a view that there might be better investment options elsewhere, either on the political risk or politically motivated, even factors behind some people's investment decisions. But moreover, just if you think that the dollar is going to continue to weaken and you think that spreading your bets around a little bit more would be a better option, then that's motivation enough for you to start to move some money out of the US, where there's been such huge inflows in the equity side and in the fixed income side for several years that people are starting starting to worry that there's just too much exposure or too much commitment in a single, all the eggs in one basket kind of a trade. And so looking for that diversification across developed markets, looking for European government bonds, looking for Japanese government bonds, or bringing money home in some cases, or even across the emerging market space, looking for local currency debt in favour of US dollar denominated securities.
Bloomberg's Paul Dobson, as well as Yan Ting Tu. Great to have you with us, of course, as we continue to watch the market moves right now. And we're watching the U.S. dollar, perhaps on some of that sentiment that Paul Dobson was talking about when it comes to U.S. assets, because we continue to see it trade lower after 3 weeks of losses already. We're talking about risk reversals also showing the market's most bearish in about 5 years. On the other side of that trade, we're seeing the euro rising to the highest since February 2022. The Japanese yen also holding gains against the U.S. dollar of 0.6%, as we hear from Prime Minister Shigeru Ishiba talking about the Japan-U.S. trade talks, that they could actually be the model for the world. Of course, the world is now negotiating with President Trump on his tariffs. He's now saying that he can't secure Japan's interest by conceding everything. So again, Prime Minister Ishiba saying that not everything is on the table, that the Trump meeting with the chief trade negotiator Akazawa was also unexpected. Of course, President Trump met with Akazawa for almost an hour last week, Paul.
Yeah, well, let's take a look at how gold is performing amid all of this upheaval. Well, I think we all know the answer to that. It's one of the trades that just keeps on giving at the moment. We've got the gold price continuing to rise. 3,375 an ounce, 76 an ounce, just as I was speaking. So gold continuing to act as a safe haven amid all this fear and also fresh bout of US dollar weakness, the dollar closing in on 2024 lows. Got more ahead on the Asia trade. This is Bloomberg. The trade war uncertainty is turning central banks cautious, with many expecting rate cuts this year or next to mitigate the economic impact. Jay Powell made light of the troubling times last week by referring to a line from the 1986 movie Ferris Bueller's Day Off.
As that great Chicagoan Ferris Bueller once noted, life moves pretty fast. For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance.
Well, there's another line in the same film that is relevant to today, and it's when the economics teacher struggles to get a reaction from the class about the impact of the Smoot-Hawley tariffs of the 1930s. The Bloomberg Opinion columnist Dan Moss has seen that movie, joins us now to discuss all of this. So Dan, the tariffs, did they help the US avert the Great Depression? Anyone?
Well, the message that the economics teacher was trying to convey to the, it's fair to say, somnolent classroom was that it exacerbated the downturn that was already in place. So you can have a lot of fun with Jay Powell's remarks in Chicago last week. What's not fun is the dilemma that many of the central banks find themselves in. And, for all his attempt to inject a bit of levity into a serious situation, Donald Trump said that he issued a report the previous day. No, he was speaking to an audience in Chicago. It was not a report, as we would understand the term. Either way, it's got him in Trump's bad books again. Outside the US, we're talking about a slightly different situation. There's an awful lot of wait-and-see vibes coming out, but this is a shock. It's likely to be a shock to growth. And on balance, outside the US, probably disinflationary as well. I think we're going to see rate cuts coming despite the wait-and-see vibe that's around.
Yeah, the wait and see might extend to Indonesia Central Bank this week as well. We're expecting a hold for a third straight meeting, but really a very difficult question for the Bank of Korea, for Australia central bankers as well.
Yeah, in Australia, inflation is back to the central bank's target, and the governor went out of her way earlier in the year when they did cut to discourage people from getting the notion there would be more where that comes from. They're going to lie low until the federal election on May 3 is out of the way. You're probably likely to see a couple of cuts between now and the end of the year. What makes Korea interesting, Shery, is you'll recall after the US election, but before Trump had taken office, they made what can be fairly called a preemptive cut, and the governor talked about the impact of the red wave and likely protectionist sentiment. Well, as we know, the tariffs that were announced on Liberation Day were so much broader in scope and the level so much higher than anything that could have been anticipated. You could see a dovish undercurrent to the Bank of Korea's hold last week. I think they'll be cutting before too long.
Bloomberg's opinion columnist Dan Moss there. And let's turn to the Philippines, because the country is now, with the U.S., beginning their flagship annual military drills, deploying around 14,000 troops in locations facing Taiwan and the South China Sea. Bloomberg's Neil Jerome Morales joins us now from Manila. And Jerome, very high stakes, given, of course, always the simmering tension in the South China Sea with Beijing.
Yes, good morning from Manila. Again, this annual military drill is already on its 40th iteration and is described as the Super Bowl of all exercises on this part of the region. As you mentioned, 14,000 troops, 9,000 from the U.S., and a dozen partners will observe here. Australia and Japan are expected to participate in these exercises that will run until May 9. And for the first time, these drills will include the Nemesis coastal anti-ship missile system, which is fulfillment of the promise of U.S. Defense Secretary Pete Hegseth that this facility, this equipment will be deployed here in the Philippines.
So how significant, how relevant is this year's activity going to be for the Philippines and the Indo-Pacific region more broadly? Because things are fairly tense in the neighborhood at the moment.
Indeed, this comes amid continuing tensions between Manila and Beijing over parts of the strategic waterway, that is the South China Sea. And on the bigger picture, these drills will happen as China and the U.S. are in the heat of a tariff war. But this goes to show that U.S. President Donald Trump is still committed to the Indo-Pacific region, to containing China, despite worries that he will focus solely on his U.S. policies during this term.
We've already seen clashes in the South China Sea featuring China's Coast Guard. So what are we expecting Beijing's response to be now?
Yes, we'll see what China will do. But in the past exercises, in the past military activities of the Philippines, even with other allies, other countries, China has protested against the U.S. presence, against presence of other countries in the region. And China has also repeatedly told that the U.S. and other countries should not meddle, should not provoke confrontation in the South China Sea.
Neil Jerome Morales there joining us from Manila as we continue to watch those the tense situation in the South China Sea. This is Bloomberg.
All right, let's take a look at how currencies are tracking at the moment. The US dollar ended last week down for the third week in a row, and it's starting this one in the same fashion. We are very closely watching levels where the US dollar spot index is going to be testing 2024 lows. We've seen a lot more trading than usual for euro dollar at this time of the week, 114.66 at the moment. So one would expect that could strengthen further. The yen, meanwhile, also strengthening, 141.23, and we have had President Trump opining on the Fed again, saying on social media that J-Powell's termination can't come fast enough. So that is bringing out the dollar bears, Shery.
Yeah, and we're also looking ahead to earnings season here across Asia. On Thursday, we'll be watching SK Hynix, of course, the semiconductor side, very much in focus given the tariff and trade tensions. And right now, the expectation is for first quarter operating profit to likely more than doubled for SK Hynix. And not to mention that this doesn't even count the potential of benefiting from the government's plan of using $23 billion to support the semiconductor sector given the ongoing trade tensions. On Friday, we'll also be watching Luxshare Precision. This is a company that gets 3/4 of the revenue from Apple, and the management has said that they believe the U.S. tariffs will not necessarily change the competitive landscape, as geopolitics isn't necessarily a new issue for the company. This, according to Citigroup analysts. Now, we'll also be watching Advantest fourth quarter operating profit. They're likely to more than have tripled, supported by strong chip and component test system growth. This is according to consensus from analysts that have spoken to Bloomberg. The semiconductor test tools could achieve secular sales growth, is the thought from Bloomberg Intelligence, Paul.
All right, let's get the latest now from the corporate front. Boeing has begun returning 737 MAX jets to the United States that were refused by Chinese airline customers. According to data from Flight Radar 24, a jet intended for delivery to Xiamen Air flew back to Guam after it arrived in China last month. Bloomberg reported last week that China has told state-run airlines to stop taking delivery of Boeing jets. Tesla's planned rollout of its cheaper cars, including a lower-cost Model Y, has reportedly been delayed by at least 3 months. The Reuters report didn't give a reason for the delay. Tesla is due to report earnings on Tuesday, with investors looking for guidance on how it intends to turn around its shrinking market share. Shery.
And Paul, take a look at how Japanese assets are trading at the moment. We are seeing significant strength for the Japanese yen towards that 141 level against the U.S. dollar as we continue to see downside pressure on the equity space. We are now hearing from Ryose Akazawa, who's Japan's chief trade negotiator. He's speaking in Parliament alongside Prime Minister Ishiba. And it's interesting that he mentions that they raised the U.S.-Japan trade agreement when he was in Washington, but he also declined to say if security was discussed with the U.S. side. And remember, there's a lot of speculation whether the Trump administration will want to conflate security issues, the cost of U.S. military support for Japan, together with economic issues. We had already heard from Akazawa that also the currency issue wasn't necessarily raised. So we'll be watching what will actually be raised in the negotiating table. We heard from local media here in Japan that perhaps Japan's car safety standards and increase of rice imports could be on the table. We'll find out a little bit more when Finance Minister Katsunobu Kato and Secretary Scott Bessent actually meet later this week, Paul.
Yeah, certainly China showing no signs of being interested in bringing this trade war to a swift end. The Ministry of Commerce saying that China is vowing to take countermeasures. It's not happy with the coercion of others to curb trade via tariffs. We've got TAIEX futures looking a little bit softer ahead of the open. FTSE's China futures currently flat.